We've got Jagannathan Tunuguntla, who's equity head at SMC Capital Markets, now joining us on the show to get an outlook on the equity market. So, Jagan, we've got before we move on to other aspects, we've got Infi putting out its numbers tomorrow. What are you expecting?
Yeah, I mean, INFOSYS, again, results should be disappointing. That's, I think, more or less the market is anticipating it. Only the difference between last time and this time is that the market is very much entering into the INFOSYS results with expecting bad results. So I think 0.5% kind of revenue growth. I think at best that may be the indication. And moreover, the salary hike that announced that will be factored into this quarter probably will put some more pressure on the margins as well. And rumors that going around maybe laying off employees. I think all put together there should be disappointing results. But having said that, if in guidance, if the management can able to indicate that the bottoming out process has completed and there is probably anticipation of green shoots in the future, probably that may set the tone for the stock bottoming out and then and again bouncing back. But having said that, results should be disappointing, but the thing that need to be watched out is guidance.
And what about the fuel price hike? How are you viewing oil marketing stocks in light of that? Because you've got a view coming in from most of the brokerages who have put a hold call on BPCL and believe that it can do well in the long term. Which would be your preferred bet according from this basket?
Before coming into that, we have to understand that now when the market, overall Nifty, when it is in sluggish mode and sort of in a profit booking mode, it's the oil and gas stocks that is actually keeping the Nifty from not falling very severely. For example, ONGC today crossed at 300 after a long time, and then BPCL, and all these stocks are sort of giving support to the Nifty from severe crash. So in that anticipation, oil and gas may be a sort of hedging bet at this moment from a trading tactics point of view. If you are going short on Nifty, maybe you can go long on oil and gas, because at some point or other the government has to bite the bullet and has to make some announcement, especially if the CNG related decision also that being sensitive they have already taken. So I think even about dieselizing they will be taking decision. Now the government is in a mood to taking tough decisions. I think railway price hike also indicating that all in all the government is in the reform process. Oil and gas may be a hedging bet for the Nifty short position.
Right. So, Jagan, we'll just come back to you, but flashing on your screen is news that the board of Bajaj Finance will meet on the 15th of January, that's next Tuesday, and consider a rights issue. So you are seeing the stock react to that news. It's up 2.6%, come off marginally, but very firmly in the green. So we'll just have to wait and see what the outcome of that board meeting is, but this is all the information that we have as of now. Jagan, just coming back to you now, what we are seeing play out in the equity markets right now is what all of you would like to term as consolidation. But if we had to see a correction in the equity markets, what would you believe the trigger for that would be?
I think trigger can many things, be it debt limit, any news flow from the US, because that itself is a major threat for the overall market mood. Of course, eventually debt limit will be increased. There is no question of US getting into bankruptcy or anything. That situation is obviously 0% probability scenario. If there is any downgrade of US, I think there can be many trigger points which can take the markets severely down. And moreover, if you closely analyze the F&O positions of different parties and different FIIs and etc., it is indicating probably a sense of distribution probably was going on for last 4 or 5 days above that 6,000 level. When it reached, when everybody turned bullish, probably between 6,000 6,050, I think there was a very smart distribution that has happened. I think that is probably one reason why the market is unable to take severely upside. It seems that upsides are sort of capped, at least from the short term point of view. I think a decent profit booking may be indicated. I think an interesting trade can be go short on Nifty and then go long on OMCs.
How are you viewing the banking space? Because most of the stocks seem to be fairly valued relative to the kind of operating environment. And in terms of results, what are you expecting?
Considering that banks have the highest weightage in terms of the industry point of view in the Nifty, I think the bank Nifty is very precarious, considering that if the Nifty gets into profit booking, I'm sure the bank Nifty will also be surrendering to that extent. So I'm sure many of the frontline private sector banks are already fully valued, so some profit booking is not ruled out. Already HDFC Bank, etc., seeing some signs of profit booking. But having said that, if somebody is trying to build up the portfolios, I think the mid-cap PSU banks and the mid-cap private sector banks, I think that can be an interesting space. Say South Indian Bank, Rural Vysya Bank, I think that can be an interesting zone. But frontline private sector, probably upsides are limited.
Right, but just aside from banks, Jagan, among the rate sensitives like autos or realty or the others, do you believe that many stocks still offer a lot of value for investors to be buying into them?
Yeah, of course. I think if somebody is betting on a decent 2030 in both economic as well as market revival, I think autos is a good place to be because naturally they are the lead indicator and they will be the first beneficiaries of any economic revival. But having said that, from the sheer trading tactics point of view, just for the entry selecting the entry point of view, probably a decent cool off from Nifty will make the entry much more elegant and much more meaningful. So to that extent, probably one can wait for probably at least a 50 to 100 points correction in the Nifty, but I think autos can be a good place to be.
How are you positioning yourself on the cement pack? Because there is a consensus that there is likely to be weakness lingering in terms of the demand. You do have prices which are likely to remain under pressure, and people believe that you'll only see a bit of a turnaround come the next few months.
So I feel cement stocks rally of 2011 and 2012, I think that was definitely, they came from nowhere. I think hardly I can think of anyone who was so bullish on cement at the beginning of 2011, almost no one. So I think, but having said that, now entire game is shifting to banks and automobiles. Probably cement stocks may not see the kind of traction which it had been seeing all the while. So to that extent, cement, it makes sense to book profits in cement. If somebody was sitting on profits in their portfolios, I hope they will be, because many of the cement stocks have rallied a lot in the last 2 years. So I think it makes sense to be on the profit booking side in the cement.
Okay, booking profits in the cement names. Thanks very much, Jagannathan, for joining in with your fundamental perspective on the equity markets.